What is up, everybody? Welcome to a new live stream. My name is Ansel Lindner. This is Bitcoin and Markets. Today, this morning, is the US CPI release. So, per usual, I wanted to jump on here and do a live reaction. It is now 8:25 a.m. Eastern, and it drops at 8:30. So, before that, let's go through a few quick forecasts here that I have. So, this is a good write-up by FX Street. Let's put that into the Telegram channel. Oh, I did already. Whoops. All right, let's delete that. So we have this write-up from FX Street, and the headline is US CPI preview forecast from 10 major banks. I'm just going to go through what they all are saying here. So TDS is expecting 0.3% month over month and 6.5% year over year. I saw some headlines, they were all talking about, hey, if it's a 6.5%, I think this was JP Morgan said if it's a 6.5 year over year, the stock market's going to rally 1.5% today or something like that. And if it's below that, it's just going to rally more. And if it's above that, it's going to rally less. So this is coming in, this TDS is coming right at that 6.5 all important number that people are kind of expecting. This is RBC Economics. They're expecting 6.3%. So that is a pretty big drop, but they don't have a month over month. Sogen is expecting a 0% month over month and a 6.5% year over year. That's pretty much where I am. I think there is a little bit better chance of it being negative, but I would say 0 to negative on this month over month CPI. Let's see, NBF decrease by 0.1% month over month, but only a 6.7 year over year. I don't know how they calculate that. Deutsche Bank is saying negative 0.15% month over month, down to 6.3% year over year. And remember, this is Deutsche Bank, and Germany printed that huge negative of 0.8% in December. Okay, ANZ says a rise by 0.4% month over month. That's all over. I mean, that's crazy. That's really, really high. And a year over year of 6.7%. ING, 0.3% month over month, 6.6% year over year. Wells Fargo saying negative 0.2%. That is a big negative number. I'll take that. Dropping the year over year to 6.3. CIBC says negative 0.1%. And Commerce Bank says 6.4% year over year. Doesn't have a month over month number. So you can see it's kind of all over the place, but actually we have a few big banks, Deutsche Bank, Wells Fargo, and CIBC. Who else has a negative? And MBF, they have negative numbers here that they're expecting. Sogen also is looking at a 0% number. So we will see what this turns out to be. 828. I'm going to refresh just in case here. I am over on the BLS website, so we will be watching out for that big time. All right, let's take a break here. So admin note, guys, Ansel Lindner, Bitcoin and Markets. Check out bitcoinandmarkets.com for all my stuff. I'm streaming on Telegram, Twitter, and YouTube. Please subscribe to the Rumble so I can start live streaming over there on Rumble. Just search for Bitcoin and Markets on the Rumble channel, and you'll find it. Subscribe so I can start streaming over there. Appreciate everybody that supports me over on bitcoinandmarkets.com. That makes this content possible. All right, so 829, we are waiting. Still November on this. Looks like an early morning here in Telegram, just a few people. Waiting. One thing I am expecting is a slowdown in Shelter once again. Shelter is the big lagging component. It has been falling the last 2 months by 0.1% each month. So I want to see a continued decline in that. I think that would be a go a long way to showing improvement to those talking head guys over there at the Federal Reserve. If it is a 0%, we're looking at 2% annualized inflation for the last 6 months. Okay, there's 830. Still showing November. Still November. Still November. Come on now. Refresh, refresh. There we go. December falls by 0.1% in December. Negative 0.1% month over month as gasoline decreases. All right, let's click in here. This is pretty big. This is the first negative number. And guys, I've been saying just after last month, I said, I expect some negative prints here in the new year. I kind of would expect a couple negative prints more than this one, but this is still, it is a negative print on the December CPI. That brings the last 6 months to only a 0.9% total rise, a 0.9% total rise in the last 6 months. So way below the 2% annualized. That should start creeping into people's minds. All right. Remember, I have been saying this whole time that when you hit peak CPI, you need to start looking at month over month. It's like you can think of it kind of like an average speed. And when you hit a brick wall, you don't really care what your average speed is anymore because it's 0 and you're dead. So this is what we saw in July. We hit the brick wall with a 0% month over month, and we have been very slow ever since. So a decline in December, CPI month over month, 0.1%. Let's dig into this CPI report. So consumer price index for all urban consumers declined 0.1% in December on a seasonally adjusted basis, after increasing 0.1% in November. The U.S. Bureau of Labor Statistics reported today. Over the last 12 months, the all items index increased 6.5%. All right, there's our month over month, 6.5% before seasonal adjustment. So this is going to be good for stocks. Let me pull up. I didn't have my chart ready. Damn. Did not have my chart ready. All right. Well, let me try to pull this up over here I just want to see what stocks are doing, guys, before I continue reading. So negative 0.1%. And we have a 6.5% year over year. And remember, that was the number that JP Morgan threw out there, that if we saw a 6.5% year over year, we're going to see a 1.5% increase in stocks. And right now, S&P 500 futures really pushing up on this horizontal line. Let me share this with my guys over in Telegram. Boom, 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 boom. Here we go. So that is the stock market reacting pretty favorably, breaking out over the 200-day moving average right into this downward diagonal, I guess, trend line. And we'll see if we can break that. This trend line has been in effect since the all-time high, all the way back longer than 1 year's time. If you look at the top of this, let's see, the top was actually for the S&P on January 4th, 2022. And now, of course, we're January 12th of 2023. So this downward trend has been in place for over 1 year. And now the stock market is trying to break out above this. Let's take a look at Bitcoin. Come on, baby. All right, Bitcoin. We've had a nice looking little rally here. We actually didn't hit new highs in this positions because back on December 14th, the high that we got to was 18,373. And right here, we got to 18,300. 370. So we missed a new high by $3. But pretty much you could call this tying. It's a tie between this higher or these highs. And if we go any higher than this candle, we would have a higher high. But I am watching it very closely, posting this chart for guys over on Telegram. Okay, let's dive back into this BLS report. So, the index for gasoline was by far the largest contributor to the monthly all items decrease, more than offsetting increases in shelter indexes. The food index increased 0.3%, and the food at home index rising 0.2%. The energy index decreased 4.5% over the month as the gasoline index declined. Other major energy component indices increased over the month. The index for all items less food and energy rose 0.3% in December. So core rose 0.3% in November. That or in December. That is a mixed signal here after rising 0.2% in November. So the core rose faster in December than in November. But remember, that's because it's X energy. And we see the energy component being the largest contributor to the decline. But energy's in everything. Okay. Gasoline is in everything. And if the gasoline is trending down like it has been, uh, that will trickle its way through everything. So core is just taking time to catch up. I would like to see what the CPI was ex shelter. I've been doing that the last couple months, and it has been pretty negative if you take out the shelter component. And remember, shelter is lagging, and it doesn't really give you a good understanding of any sort of forward looking. Um, first off, CPI. Well, uh, shelter is already lagging by 12 months. And when we get it now, we're getting December numbers for right now in January. So the release is a month behind. And so add that onto the 1 year behind. So shelter component is lagging by over 1 year. And if we see energy falling right now, and it has been falling, shelter and all these other components will continue to fall with it. So, when you see a big decrease of 4.5% on the energy side, energy components, then you can bet that you're going to see that trickle into the rest. So, once again, I have not ever in the last 2 years ever moved from my conviction that this is transitory inflation. And I think deep down, if you got Chairman Powell, in a room and off the record, and you said, hey, do you really think this is transitory? He would say yes. He would say yes, this is transitory, for the exact same reasons that I think it's transitory. I mean, we don't have a self-perpetuating cycle here at all. The government spent 1.3 trillion or something like that on the stimmy checks, and then zero. You can't continue prices higher if you don't continue with the stimulus. I mean, even the inflationistas should agree with me on that. All right. Indices which increased in December include the shelter, household furnishings, operations, motor vehicle insurance, recreation, and apparel indices. The indices for used cars and trucks and airline fares were among those that decreased over the month. The all items index increased 6.5% for the month, for the 12 months ending December. Okay. All items index increased 6.5. That is the year over year. This was the smallest 12-month increase since the period ending October of 2021. The all items less food and energy index rose 5.7% over the last 12 months. Okay. All right, let's take a look at this table here, and I'm going to see if I can do this. I don't know if I'll be able to do this here though. I can't do this on this short of notice. Oops. I was gonna cut out this table and post it in the Telegram, but I'll have to do that here after this. Let's take a look at the shelter component. Okay, the shelter component went up a little bit. We have 0.8% on the shelter, up from 0.6%. So very interesting what is going on here on the shelter side. Let me go to Fred. I'm going to go to the Fred database real quick because US CPI X shelter. Okay, that's not it. Give me 1 second, guys. All items less shelter. Here we go. So let me copy this link over and I'll share this screen. Let's edit this to be percent change. And we're going to zoom in to this last bit. So they have not updated December. Okay. So they'll take a little bit here to update the December number, but you can see on the screen here, if you're watching on YouTube or Twitter, November was negative 0.4% if you take out shelter. And I think it's going to be way lower than that if you take out shelter this month. So, all right. What other news do we have? Well, let's take a look at the markets here a little bit more. Bitcoin not doing much, going to go down to the 1 hour time frame. It did fall off a little bit here. Bitcoin did react slightly negative. It looked like it was anticipating a different reading on this CPI. Kind of an interesting pattern there. Let's go down to stocks. I'm going to take these moving averages off. Posting this over to Telegram. All right. So you can see that markets are reacting kind of mixed so far. This was, again, the year over year at 6.5%. This is kind of what everyone was expecting. Very interesting that it's negative 0.1% month over month. That means the last 6 months, I mean, we're under the target range for what the Fed wants, right? The quote unquote target range. They have a symmetric 2% target. That means if it's below 1%, they're supposed to ease. And if it is above 2%, they're supposed to tighten. So we'll see how the headlines react to this. Let's take a look at Zero Hedge and see if anything is coming across there. Okay, CPI prints as expected. Real wages shrink for first month in a row, for 21st month in a row. All right, so as expected, like I said, there's not a huge surprise other than being negative month over month. And that negative month over month will continue to sink into people because, as I said yesterday, I'm starting to hear a lot more around there that people are like, oh, as inflation moderates this year, we're going to go into recession stuff. I mean, inflation has moderated, quote unquote, inflation. Price rises have moderated, and we actually have our first negative print. So prices are now starting to come down. All right. All right, guys. Well, that's where I'm going to end it for right now. Don't forget, I am live today at 12:30 Eastern time for Fed Watch. Trying to work that out. CK and producer Chris are on the road, so we'll see if we can hook that up with Nolan. I hope we can have a show today because this is CPI day, so we should be having a show. And but if things change, I'll let you know on Telegram and Twitter. So follow me there. Also, make sure you're subscribed to the new YouTube channel, BTC Market Update, and on Rumble at Bitcoin and Markets. That helps me get these live streams out. Also, if you're watching on the video platforms, please like, subscribe, turn your notifications on, and make a comment. That helps other people find the show. So, all right, guys, we'll talk to you